Smart Alec Show podcast.
Smart Alec Show, baby!
What do you think about the Wall Street Bets saga? Like what's this whole argument of the big wigs and the fat cats at the hedge funds versus the common everyday trader, the common people? What do you think about how like this whole thing of investing has changed with Twitter, Reddit, and people are able to come together on the internet and like all these platforms like Robinhood, trying to democratize investing. What do you think of all that, man? What do you make of this whole digital revolution within finance?
So I'll tell you, first of all, just from a completely selfish point of view, like that kind of thing is like my fantasy, right? That like as a teacher, when I can come in and start talking about GameStop and all the, this crazy stuff, like that is so interesting. I love that stuff, right? I mean, I love when we have stories like that, and Archegos, and there's just like some things that happened this just this year. So that stuff, just from personal perspective, it's awesome. But from more of a why does it matter? I think a lot of it was shocking. I think that in finance, we always talk about the smart money and the dumb money. And the dumb money is the retail investor. It's you and me, right? It's they're looking to try to figure out what the retail investor is doing, and they do opposite of that. And so the idea of the retail investor sort of all ganging up on the hedge fund and sort of putting them in pain. Wow, like that's a shocking thing that I don't think we've really seen before. And it's funny because teaching investments and also teaching money in capital markets, I always have talked about short squeezes, and we've seen a few, during my lifetime, you've seen a few that were sort of more notable than others, that older people might tend to remember more than others. But nothing like this, nothing like GameStop. And so, I think that what you saw, it was good and bad, right? I mean, I think that it's an interesting story. It's sort of funny to see the small guy win.
Yeah.
I think the bad thing is this. I think the bad thing is that we've certainly recently already seen some or less shorting of stocks. Because I don't want to be short of stock. It's one thing if I buy a stock for $20 and I know it could go to zero, but I short a stock at 20 and it can go to $1 billion. And, my losses are unlimited. And when you look at that, I think the hedge funds and any short seller realizes now that's a lot of risk. That's a lot of risk to take. And I would argue that short selling is a good thing for the markets, right? We want people to be able to profit when they can find bad news about a company. And so, to not have that bad news priced into stocks, that's how you risk having bubbles. And I don't think that's a good thing. And, I as I always say, and I think I probably said it this semester, that without short sellers, then stocks are priced by the average jubilant moron, and I don't think that's good. I think we want to have a stock reflecting the fact that you're bullish and I'm bearish. But if I'm afraid to be bearish, then it's just the bullish investors are the only ones who are there, and I don't think that's good for us.
So just keep rising onto the moon, huh?
Apparently so.
So in layman's terms, what is someone doing when they're short selling a stock? Like what happened here with Wall Street Bets coming together and saying these hedge funds are shorting GameStop, way over the float. Let's screw them over real quick. Let's catch them.
Sure. So what happens is this. Let's imagine that you own GameStop, and I think it's a terrible stock. Well, what happens is I tell my broker. And my broker owns millions of shares of it on behalf of all the other customers. And I say, I want to make a bet against GameStop. So the really big picture, before we go into more detail, is, you can buy a stock for $20, hoping it's going to go to 30. And if it goes to 15, you lose. If it goes to 30, you win. I can short a stock, which is just the opposite bet. I sell it at 20, but I have to buy it back later. If I buy it back at $5, I've made $15. I sold it at 20. I sold it first, and then I bought it at 5. But of course, if it goes to 30, I buy it back at 30. I sold it at 20 and I lose $10. So you're just reversing the order. And what happens is this: my broker loans me some shares. Maybe they're your shares that you own GameStop, and they loan me some of their shares. You don't even know about it. And they loan me some of these shares. I sold them at 20. And now at some point I have to put them back into your account. So I hope that I buy them back at 10. But if I have to buy them back at 50 or 60 or 100 or 400, I just lost a lot of money. So I'm just basically making a bet against it. But remember that the fact that I'm able to do that means that GameStop's stock price is a reflection of your bullishness buying the stock and my bearishness, so selling the stock. And so that means the price is reflecting both bullish and bearish views. But if I say, look, shorting stock is too dangerous, even though I think GameStop may be a terrible stock, well, then all you're left with are the bullish people. And there's no one who has an incentive to bring bad news to the market. I don't think that's good.
Yeah, that's crazy, man. So then the short squeeze happens when, the hedge funds are covering their positions and then they're all just running up the price. Boom.
Yeah, absolutely. So what happens is all of a sudden some good news comes out, like with GameStop, you had the Chewy executives who, who had bought into the company, later joined the board, that kind of thing. But the bottom line is that the stock starts moving up. And if I'm short the stock like the hedge funds were, I'm losing money. And so as that stock goes from 20 to 30, I think I better get out of this position. I just lost $10 per share. So how do I get out? I buy the stock because I already sold it. I got to buy it to put it back in your account. And so what happens when I put in my order to buy? That's more buying pressure, pushing the price up further. Some other short seller gets scared and he or she starts buying back their position. That's a short squeeze. Everyone trying to get out the door at the same time. Everyone trying to close out their short position. And the way they do that is by buying the stock, pushing the price up further.
So then would you say a gamma squeeze is the exact same thing happening, but on the option side of things?
Yeah. I mean, I guess to some extent, I hadn't really thought about it, that much that way. But, ultimately what happens is as the volatility of a stock increases, what happens is the dealers who are hedging have to buy more of the underlying stock. And so, absolutely, I think that, that's probably a very fair comparison.
Interesting stuff. It was crazy to see. So what do you think of the argument that the hedge funds were saying, oh, these retail investors can't come together and collude and come together to raise the price up? Do you think there's been an element of that behind the scenes in the hedge fund world too? Them being unfair to the retail investor throughout the years too?
Yeah, well, one of the funny things is if you look at the new ideas that come from hedge funds, they all pile into the same stocks. So I think that's sort of a disingenuous argument when hedge funds are saying, oh, these little guys are teaming up against us and beating us up. That's certainly what hedge funds, all share ideas, and they tend to be in many of the same stocks. They're constantly talking with each other, getting ideas either directly from each other or through intermediaries like sell side. So I don't think there's anything like that. We have funny securities laws that basically say you can't do certain things that are intended to manipulate the market, but what we're all trying to do is push a stock price up. And so what exactly is manipulation, right? I think that we have a lot of laws like that are sort of funny. This is probably totally off topic, but just yesterday I was reading a story about a Louisville basketball coach, an assistant basketball coach who is being charged with extortion. Mm-hmm. And basically what he said to his employer, I guess he was getting fired, and he said, you need to pay me, you need to give me one more year's salary. Otherwise, people are going to find out about the, some violations and that kind of thing that we've committed. And, I'm not sure how, the difference between, hard negotiation and extortion, right? And it's the same thing when you start to get to the markets where you're saying, okay, I'm trying to talk up this stock that I want to go up. And, at what point is it collusion and market manipulation? I don't know. I think these are hard issues, but everyone is always trying to talk up their book, right? Everyone is always trying to say, these are the stocks I like, and everyone needs to love them so that I can eventually sell into that,
Yeah, no, it's definitely interesting. There's a lot of controversy over the ability of, someone that, maybe has 100,000 followers on Twitter to get on and say, hey guys, I love, this company. Like, we'll just use Tesla, for example. I love Tesla, here's what I think is going to happen with the stock. And boom, they're sharing their opinion, and boom, they have 100,000 followers that, you can visually see it on the chart. It'll incrementally push it up from the moment they sent that tweet out, so people have a lot of problems with that. But my thing is, this stuff's been happening for years. Whether you have, a big hedge fund manager, he may come on the CNBC and do an interview and say, oh, this, stock is incredible. It's going to do amazing. In a sense, that's essentially the same thing. You're getting on a platform that everyone's watching, and you're saying something positive about this stock that you have a large position in. And, these are the same people that are talking trash on the people that are doing the same thing within the digital realm. So I kind of see a little bit of hypocrisy there. So
absolutely. And, and if that ever becomes illegal, then, Elon Musk is going to be in the penitentiary for life, right? I mean, maybe he's not talking about stocks so much, as he's talking about crypto, but, that's what he does.
Yeah.
And a lot of people are doing that.
It's so crazy. I remember he tweeted one time. He was like, I think Tesla's overpriced. This is about a year ago. And then boom, you just see it within the hour, negative 9%. Just it's crazy, man. It's crazy how stuff is, changed in this digital space, man. We'll see what happens.
Don't be such a smart aleck.